All right, so you ready to dive in?
Let's do it.
All right, so for today's deep dive, we're going to be looking at Tren Griffin's book, The Complete Investor, and really trying to get a better understanding of his ideas as they connect to Charlie Munger.
Sounds good. Yeah, The Complete Investor. It's really an interesting book, and I think we'll be able to pull out some really cool stuff for the listeners.
Yeah, and I think, what makes this deep dive really interesting is we're also going to be pulling in some of those amazing Charlie Munger quotes from Charlie Munger. Ich habe dem nichts mehr hinzuzufügen.pdf.
Oh yeah, those are gold.
So I think if we can kind of weave those two together, I think we're going to have a really fascinating conversation and help everybody listening kind of unlock some of the really key insights that are packed in here.
Yeah, and speaking of unlocking insights,
Mhm.
one of the things I really love about this book and about Munger's philosophy in general is the emphasis on simplicity, on really cutting through the noise and getting to the core of things.
Oh, absolutely. And you see that right away, even on the first page. It's this idea that's so central to Munger's thinking, and it's so powerful, and it's almost counterintuitive. It's this idea of avoiding stupidity.
Avoiding stupidity.
He says, and I'm going to quote him directly here, "It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent."
It's so true, and it's such a simple idea, but it's so profound.
Right, because, you think about it, in investing, in business, in life in general, we're often, trying to be so smart. We're trying to outsmart the market, come up with these complex strategies.
Oh yeah, always trying to find that edge, that secret formula.
Exactly, and Munger's like, you know what, just stop trying to be so clever.
Just don't be stupid.
Yeah, just don't be stupid, and you'll be surprised at how far that gets you.
It's like he's saying the bar is actually lower than we think.
Exactly, and I think that's such a refreshing perspective, and he talks about this concept of inversion, which I think is really fascinating, this idea of flipping the problem on its head.
Oh yeah, the idea of solving a problem by figuring out what not to do.
Right, so instead of, agonizing over how to make a brilliant investment, you ask yourself, what are the dumbest mistakes I could possibly make?
And how do I avoid them?
Yeah, and it's like clearing the path. You're removing the obstacles, and then the sensible, the good opportunities that kind of just emerge.
Yeah, you stop tripping over your own feet and you can actually see where you're going.
And he says it really well. He says, by avoiding dumb mistakes, you're better able to pursue the few sensible things.
It's like he's giving you permission to focus on what truly matters.
Yeah, it's like, that old story about the space pen. Have you heard that one?
Oh yeah, the NASA versus the Russians story?
Right. NASA spends millions developing this, super high-tech pen that can write in zero gravity.
And the Russians just use a pencil.
Exactly. It's like sometimes the most straightforward, the simplest solution is the best one. It's about avoiding the overly complex, the over-engineered approach.
And it's much cheaper too in the case of the pencil.
Right. And, I think that story really embodies Munger's philosophy.
Absolutely. It's all about practicality and focusing on what works.
Yeah. And this kind of ties into another really important aspect of Munger's thinking, which is this constant emphasis on asking yourself, what's the downside?
Well, it could go wrong.
Yeah, what can go wrong that I haven't considered? It's like he has this built-in risk radar.
Always scanning for potential disasters.
Right. It's like, before you make any decision, before you make any investment, you got to force yourself to look at the potential downsides, the worst case scenarios.
Yeah, and not just, the obvious ones, but really try to dig deep and think about the things that other people might miss.
And he's not saying, don't take any risks. He's just saying be aware of the risks.
Understand them.
Yeah. And factor them into your decision making.
It's like that saying, hope for the best, but prepare for the worst.
Exactly. And, this focus on the downside, it's like a form of intellectual due diligence. You're constantly asking yourself, what if?
What if this happens? What if that happens?
Yeah, and by doing that, you're naturally becoming more thoughtful, more cautious, less likely to just jump into things without really understanding the risks.
It's like having a safety net for your investments.
Yeah, and this kind of leads us to another key theme that runs through The Complete Investor and through Munger's thinking in general, and that's the power of simplicity.
It's simple, stupid, right?
Yeah, exactly. And Munger says it so well. He says, if something is too difficult, we move on to something else. What could be simpler than that?
I love that quote. It's just so straightforward.
It is, and it's almost liberating. It's like he's giving you permission to say, nope, not touching that.
Yeah, it's okay to admit that you don't understand something and move on.
And I think that's so important because, so much of investing in business is about, trying to impress people with your brilliance, your complex
Oh, yeah,
strategy.
trying to sound like the smartest person in the room.
Right. And Munger's like, what real brilliance is about, recognizing when something is just too complicated.
Yeah, and having the discipline to walk away.
And I think that takes a lot of courage.
It does, because it goes against our natural inclination to try to figure everything out.
Right. And this idea of simplicity, it also allows for greater mental clarity. You're not wasting your time and energy trying to decipher these overly complex businesses or, convoluted financial instruments.
So focusing on what you can understand.
Exactly. And by doing that, you're much more likely to make sound decisions.
And as the book points out, concentration becomes much more effective when it's applied to simpler, well-understood areas.
Right. You can really dig deep. You can really understand the nuances.
Yeah, you can become an expert in your little corner of the world.
And this idea of simplicity, it's not just about, making things easy for yourself. It's also about reducing risk.
Absolutely. Because the more complex something is, the more likely it is that there are hidden risks.
Yeah, and when you keep things simple, you're reducing the surface area for things to go wrong.
It's like building a house.
Yeah.
A simple, well-built house is going to be more resilient than a complex one with all sorts of fancy features.
And I think that's a great analogy, because in investing, it's not about, building the most elaborate, the most impressive portfolio.
It's about building a solid portfolio that can withstand the storms.
Right, and that can weather the ups and downs of the market.
And that brings us to another key principle, the importance of taking a long-term, risk-averse approach.
Absolutely, and Munger says this so well. He says the reward for a risk-averse long-term orientation is exactly that long-term.
You're in it for the long haul.
Yeah, you're not trying to hit a quick jackpot, you're not trying to get rich quick.
You're trying to build wealth steadily over time.
By avoiding unnecessary risks.
And by letting the power of compounding work its magic.
Right, compound interest. It's just like the eighth wonder of the world.
It really is, and Munger understands that better than anyone.
Yeah, and there's this great little anecdote that kind of illustrates this idea of, focusing on the long term and not getting caught up in the short-term fluctuations of the market, the story of the investor and the frog.
I'm not familiar with that one.
Oh, it's great. So there's this investor, she's sitting by a pond,
Okay.
and this frog pops up and says, "Are you an investor?"
A talking frog.
Yeah, and the investor's like, "Yeah, I am. Why do you ask?"
And the frog says,
"Well, I just wanted to know if you're an investor or a speculator."
interesting.
And the investor's like, "Well, I'm definitely an investor.
Yeah.
I'm in it for the long haul."
I'm not interested in quick flips.
Right. And the frog says, "Well, in that case, you should ignore the daily ups and downs of the market. They're just ripples on the surface of the pond. What you should focus on is the long-term growth of the lily pads."
Wise frog.
Right. And the point of the story is that what truly matters is your actual long-term performance.
Yeah.
Not how you're doing compared to some arbitrary benchmark.
Not how you're doing relative to other investors.
Exactly. As the saying goes, you can't eat relative performance.
Love that.
Right. And Munger is all about those tangible, lasting results. It's not about bragging rights. It's about actually growing your wealth over time.
It's about reaching your financial goals.
Now, a really important figure in this whole value investing framework, and someone who both Munger and Griffin clearly admire, is Benjamin Graham.
Oh, yeah. The father of value investing.
And particularly his concept of Mr. Market.
Can you give us a quick rundown of Mr. Market for those who might not be familiar?
Yeah, so Graham, he basically personified the stock market as this, kind of eccentric character named Mr. Market.
I love that analogy.
Right, and Mr. Market, he shows up at your door every day.
Yeah, every single day.
And he's always offering to buy or sell you shares in his businesses.
And the catch is?
The catch is that Mr. Market is incredibly emotional.
He's moody.
Yeah, he's moody, he's unpredictable one day, he's euphoric, he thinks everything's amazing, and he's offering sky-high prices for his shares.
And the next day he's depressed.
He's in a panic.
And he's practically giving his shares away.
Yeah, and the key insight here is that a disciplined investor, they don't get swept up in Mr. Market's mood swings.
They see through his emotional outbursts.
They recognize that his prices are often irrational.
They take advantage of his manic depressive tendencies.
Exactly. They buy when Mr. Market is down, and they sell when he's overly optimistic.
They buy low and sell high.
It sounds simple, but it's incredibly difficult to do in practice.
Because it requires you to be patient and disciplined and to go against the herd.
And to think for yourself.
Which is not always easy.
Now, Munger definitely buys into this idea of market inefficiency, right? He doesn't believe that the market is always perfectly rational.
He acknowledges that there are times when the market gets things wrong.
Yeah, he says it pretty clearly. He says, I think it's roughly right that the market is efficient, but it's far from perfectly efficient. And the difference between perfectly efficient and slightly efficient provides a big opportunity for people like us.
So he's basically saying that the market is mostly efficient.
Most of the time.
But there were these little pockets of inefficiency.
These little mispricings.
And that's where the value investor can find their edge.
Yeah, and he calls this concept near efficiency.
Efficiency.
So it's like, the market, it generally gets things right.
But it makes mistakes.
And those mistakes create opportunities.
And the key is to be able to spot those opportunities.
And to be patient enough to wait for them.
Which brings us to this really important idea, the concept of margin of safety.
Oh yeah, margin of safety. This is huge in value investing.
It's one of the core principles.
And it sounds kind of, technical, but it's actually a very common sense idea.
It basically means buying something for significantly less than what you believe it's truly worth.
Yeah, it's like building in a buffer.
A cushion.
Yeah, a cushion to protect yourself from errors in your analysis or from unexpected negative events.
Or from Mr. Market's crazy mood swings.
Right. And Warren Buffett, he has this great analogy. He says, when you build a bridge, you insist it can carry 30,000 pounds, but you only drive 10,000-pound trucks across it. And that same principle works in investing.
So you're building in a margin of safety.
Exactly. You want that extra strength, that extra resilience in case something goes wrong.
You don't want to be driving a 30,000-pound truck across a bridge that's only built to carry 10,000 pounds.
Right. That's a recipe for disaster.
And in investing, that disaster could be a permanent loss of capital.
Now, to figure out that significant discount, you need to have some sense of what something is actually worth its intrinsic value.
Intrinsic value.
How do Griffin and Munger approach this rather elusive concept?
Well, at its most fundamental level, intrinsic value is the estimated present value of all the future cash flows a business is expected to generate over its lifetime.
So you're basically trying to figure out how much money the business is going to make in the future.
And then you discount that back to today to get a present value.
And that gives you an idea of what the business is really worth.
In theory.
Now, of course, this is all based on estimates and assumptions about the future.
Which, as we all know, is highly unpredictable.
Right. And Munger, he's very upfront about the fact that, trying to pinpoint the intrinsic value of some businesses is just too darn hard.
Yeah, he famously says, we don't have a system for estimating the correct value for all businesses. We just put almost all of them in the too hard pile and look at a few easier ones.
So he's basically saying, focus on the businesses that you can understand.
Where the intrinsic value is relatively easy to estimate.
And don't waste your time on the ones that are too complex or too opaque.
Yeah, and I think this is a really important point because a lot of investors, they try to be too clever.
Mm-hmm.
They try to value every single business.
They think they can figure it all out.
And Munger's like, you know what? Just focus on the ones that you can understand.
And be honest with yourself about what you don't know.
Yeah, intellectual humility is a key virtue in investing.
Absolutely. And, another way to think about intrinsic value is to ask yourself what a knowledgeable private buyer would be willing to pay for the entire business.
That's a good point. It's like you're trying to think like a business owner.
Right. You're not just buying a piece of paper. You're buying an actual business.
And you need to think about what that business is worth to someone who would be running it.
Now, this idea of sticking with what you understand leads us to the concept of the circle of competence.
Circle of competence.
Munger talks about this a lot, doesn't he?
He does. It's one of his favorite concepts.
And it's basically the idea that you should only invest in things that you truly understand.
Things that are within your circle of competence.
So, if you're a doctor, you might understand healthcare companies better than you understand tech companies.
Or if you're a software engineer, you might understand software companies better than you understand retail companies.
And the point is that when you invest outside of your circle of competence, you're taking on more risk.
Because you don't really know what you're doing.
And as Munger says, the most reliable way to be cheated is by deserving it.
Meaning that if you don't understand something, you're more likely to be taken advantage of.
So the key is to be honest with yourself about what you know and what you don't know.
And to stick to your knitting.
Right. Focus on the areas where you have a genuine edge.
And where you can make informed decisions.
And this is something that Berkshire Hathaway is famous for doing.
They're very disciplined about staying within their circle of competence.
Yeah, they've avoided investing in a lot of industries over the years.
Like tech, for example.
Right, they didn't invest in tech during the dot-com boom.
Even though everyone else was making a ton of money.
And they didn't invest in the recent tech boom either.
And that's because they felt like they didn't understand those businesses well enough.
And they were willing to miss out on some potential gains in order to avoid taking on unnecessary risk.
Which is a sign of true discipline.
Now, to build that understanding, to potentially expand your circle of competence over time, Munger strongly advocates for the use of mental models,
Mental model.
which he often refers to as worldly wisdom.
Worldly wisdom.
Can you explain what he means by that?
So Munger believes that to really understand how the world works, you need a broad framework of mental models.
These are basically fundamental ideas and concepts,
Drawn from a wide range of disciplines.
like psychology, history, physics, engineering, even biology.
Yeah, he's a big believer in multidisciplinary thinking.
And he says that you need to array your experience, both vicarious and direct, on this lattice work of models.
So it's not just about having a bunch of models in your head
It's about connecting them
and seeing how they interact
and using them to understand the world around you.
and to make better decisions.
And Munger himself, he's a voracious reader
He's constantly learning new things.
and adding to his lattice work of models
And he encourages everyone to do the same,
to read wide
to learn from different disciplines.
and to build their own worldly wisdom.
Because the more models you have in your head, the better equipped you'll be to navigate the complexities of the world.
Now, it's interesting, the complete investor, it also touches upon the importance of character and certain virtues for investors.
Oh, yeah. That's a really important point.
Because it's not just about having the intellectual horsepower
It's also about having the right temperament.
and the right character traits.
And Munger identifies several key virtues as essential for successful investing.
like patience,
Discipline,
a willingness to learn,
trusting your own analysis,
intellectual humility,
independence of thought.
and unwavering focus.
Yeah. These are all really important qualities for an investor to have.
Because the market, it can be a very emotional place.
And it's easy to get caught up in the hype.
Or to panic when things are
Yeah.
going down.
So you need to have the discipline to stick to your plan.
And the patience to wait for the right opportunities.
And the humility to admit when you're wrong.
And Munger, he has some great quotes on these virtues.
Like on patience, he says, success means being very patient but aggressive when it's time.
And on discipline, he says, we have the discipline to get our hands out of our pockets when it's appropriate and keep them in our pockets at other times.
And I think that's a really important point because a lot of investors, they feel like they need to be constantly doing something.
Buying or selling.
Right. But sometimes the best thing to do is nothing.
To just wait for the right opportunity.
And to have the discipline to not chase every hot stock or every new trend.
Now, throughout this deep dive, we've encountered so many insightful quotes from Charlie Munger.
Yeah, he's a quote machine.
Do any particular ones stand out to you as really capturing the essence of his investment philosophy?
Well, of course, the one about avoiding stupidity is foundational.
Right. It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent.
That one really sums it up.
Yeah, and I also love his quote about simplicity.
If something is too difficult, we move on to something else.
So simple, but so powerful.
And then there's his quote about long-term thinking.
The reward for a risk-averse, long-term orientation is exactly that long-term.
And his quote about market efficiency.
The difference between perfectly efficient and slightly efficient provides a big opportunity for people like us.
And of course, his emphasis on margin of safety, circle of competence, and mental models.
Those are all key principles.
But I also like some of his shorter, more pithy quotes.
Like what?
Like, there is no formula to get rich easily. If there were, everyone would be rich.
That's a good one.
And go to bed smarter than when you woke up.
Yeah, those are both great.
They're simple, but they're profound.
And they really capture Munger's essence.
His wisdom, his practicality.
Now, our focus today is also on Tren Griffin's book, The Complete Investor.
Right.
While our source material doesn't provide specific biographical details about Mr. Griffin.
Yeah, unfortunately, we don't have a lot of information about him.
What can we infer about him and his perspective based on the book itself?
Well, I think it's clear that Griffin has a deep understanding of and a deep respect for Charlie Munger's investment philosophy.
Oh, absolutely.
The way he structures the book, the way he selects and explains the key principles, it all suggests that he's a very knowledgeable interpreter and curator of Munger's wisdom.
Yeah, he's not just summarizing Munger's ideas.
He's really trying to make them accessible and actionable for a wider audience.
And I think he does a great job of that.
Yeah, the book is very clear and well written.
And it's full of great examples and anecdotes.
And I think it's clear that Griffin is driven by a genuine desire to share these principles of value investing and to help others become more successful investors.
So considering everything we've explored today, the focus on avoiding mistakes, the importance of simplicity, and a long-term mindset understanding market psychology, the vital importance of a margin of safety and staying within your circle of competence, and the need for a multidisciplinary approach to understanding the world, would you recommend The Complete Investor to our listeners?
Absolutely. I think it's a must-read for anyone who's serious about investing.
It's a great introduction to value investing.
And it's a great refresher for experienced investors.
Yeah, and it's full of practical advice that you can actually use.
It's not just theoretical.
And it's written in a very clear and engaging style.
So I highly recommend it.
So to bring it all together for you, our listener today's deep dive into The Complete Investor and the enduring wisdom of Charlie Munger has really underscored the importance of avoiding stupidity in your investment decisions, cultivating a long-term perspective, understanding market behavior, and really operating within your circle of competence.
And of course, demanding a margin of safety in every investment you consider.
Right, that's crucial.
It really makes you think, how might consistently applying even just one of these principles, like avoiding obvious errors, positively influence not only your investment portfolio, but also other areas of your life.
Like your career or your relationships.
Exactly. That's it for today.
Until next time,
Happy investing.
happy investing.